us from Mumbai. After the sharp sell-off, the Freaky Friday, the Manic Monday, the Tuesday is turning out to be slightly better. Not terrific, but it's not terrible. So look at that as a bright side if you're a bull, that is. Before we go any further, I just want to tell you what the markets at the moment. The Nifty is a little below 11,000, but in the green. The Sensex has hit a century, 36,413. The pain is really in the broader markets, but it's the NBFCs which continue to sell off. I'm going to ask my producer to show you, for example, Dewan Housing, which had rebounded yesterday, but it's back in the red today. Look at Indiabulls Housing Finance, Bajaj Finserv, all the NBFCs once again coming under pressure. It's all thanks to the INFS crisis. We at ET Now have been telling you how there is a crucial meeting on September 28th where all stakeholders, including the large shareholders, will present their side of the story and rescue plans to the Reserve Bank of India. All of them have been summoned by the RBI. The government on its part, in an ET Now exclusive, citing sources, we told you how genuine dues will be paid to INFS, the likes of genuine dues from companies like NHAI. I'm going to take this conversation forward now with Raman Aggarwal, the chairman of FIDC. Mr. Aggarwal, we decided to get you on the channel because of the massive sell-off in NBFCs, the panic that exists within the market, despite regulators on Sunday in an unprecedented move coming out with a joint statement saying they're monitoring very closely. Finance Minister Arun Jaitley yesterday morning tried to soothe frayed nerves and spoke about how he is personally monitoring the situation and will ensure there's ample liquidity when it comes to SMEs as well as mutual funds. I don't know if the markets took that seriously yesterday, if I were to see the sharp sell-off that did take place, but I want to understand from you, what is the view that is coming in from NBFCs? How bad is the situation? How bad is the liquidity situation? Is INFS our next Satyam? Could it be India's Lehman Brothers?
First of all, at the outset, let me say that what has happened has been a more of a typical stock market phenomena than the actual reflection of the sector's health or the inherent strength of the balance sheets. So while it is correct that yes, a company like ILFS is facing issues, there are crisis situations, but that should not be extrapolated to say that the whole sector per se today is facing a crisis situation. I support this, so if you just look back, step back a few months, the financial stability report issued by RBI in June 2018 clearly talked about this inherent strength. I'll just cite one point which will justify what I'm saying. The capital adequacy ratio average for the sector stood as on March 2018 at 22.9%. And in that stability report, RBI also talked about conducting stress tests on the credit risk of the NBFC sector. And in that stress test, even doing a 3-level stress test of increasing the NPAs hypothetically, even then the figures projected were that the sector at an average will continue to have a capital adequacy of above 20% as prescribed the norm of 15%. This clearly shows the inherent strength in the system. So I think it's more of a panic reaction which has happened. And yes, we agree there are certain concerns. There are concerns relating to liquidity boiling out of there are various factors contributing to it, payment of advanced taxes, and suddenly with the crisis, the ILFS situation developing, certain loss of confidence in the market. But let us reflect it more as a derating of the growth which was galloping, maybe slowed down to that extent. But certainly, I don't see any crisis situation out here. That has been blown out of proportion.
Come in there. Mr. Aggarwal, if I could come in there, in Mumbai, when it comes to the markets, there seems to be this expectation that the onus is now on the government to come out and bail out INFS, which people like you also believe is a isolated situation. It's not as if all of the NBFCs are threatened, that INFS can be ring-fenced. Why should the government bail out INFS? It does it with INFS today. It may have to start doing it tomorrow. It's not a government company. It's a private company. Yes, you may have LIC as the largest shareholder, 25%. You've got SBI and some PSU banks. over there. But why should the government do it? And if it does it for INFS, where does it stop?
To that point you may be correct, but we have to look at it holistically. Government should intervene to the extent that this does not become a kind of a panic button, which is it is seem to be happening. I don't see, I would refrain from actually talking about the company per se, but yes, the intervention level has to be to the extent to ensure that things don't go horribly wrong for the sector per se, that because of one stray incident, suddenly you create a crisis situation. So the intervention only has to be to that extent.
So would also just like to get a sense that, as you're saying that there is no panic button, but markets are, reacting, or analysts, the fear that is there in the market is that there is a systemic issue. As you are saying that there's no systemic issue right now in the system, you expect the cost of funding to go up? Liquidity needs to be slightly higher, which means growth rates can be slower for the sector?
See, there are two things here. Now, one, while yes, this market situation, let's look at it this way. We have seen even in the past, because of various reasons, cost of borrowings may go up. On various equations, we may see some temporary liquidity crunch coming in. But to say there is a panic situation is wrong. Why? Because see, moreover, if you look at the majority, in fact, I would say a big vast majority of the sector, the business model is different. It's not into long-term lending. If you see the NBFC model, the lending tenure is what? Average 3 to 5 years. So this talk of asset liability mismatch is, I think, wrongly placed. It can only be said for companies which are into long-term project financing, and which could also include the housing finance companies, but certainly not the typical NBFCs, because who are more into retail lending, where the ticket sizes are small and the tenures are hardly 3 to 5 years of an average tenure. So there is no question of any asset liability mismatch. Yes, the cost of borrowing will go up, has gone up to some extent, but not to the extent of creating a panic in the sector. I think the sector is strong enough to withstand all these adversaries.
Right. Also, just wanted to know about the asset quality issue. I know you cannot comment about INFS and how things are happening over there. But say if, there are still a big few assets that come in for asset quality issues, you think the risk-taking capacity in the system will become very low? I'm talking about corporate banks overall.
Not really. See, I'll tell you why. If you talk of banks, I think just yesterday or day before, we have none other than the SBI chairman himself restating and reposing his confidence in the NBFC sector. See, let's look at it this way. If there was at all a question on the confidence on the sector, why would the regulator RBI issue guidelines on co-lending, on the co-origination, where it has talked about banks and NBFCs coming together and doing a co-lending model to the priority sector. This itself clearly reflects the confidence which even the regulator reposes in the NBFC sector. So it is not, as I said, not at all a systemic issue, not at all a sectoral issue. It is a one incident which has suddenly sparked and created panic in the system, which I think is outstretched. But yes, there are certain concerns, there are certain liquidity concerns, there are concerns relating to the cost of borrowing going up. But as I again said, let this only be taken up as a reflection on the growth rate may be coming down. But certainly nowhere I don't see any credit crisis developing.
Okay, Raman, we're going to leave it at that. Mr. Aggarwal, always a pleasure chatting with you. Thanks so much for joining us. Whichever way you look at it, the NBFC is still in a sell-off mode. Maybe the regulators